Most people think becoming rich starts with earning a huge income, finding one lucky opportunity, or discovering a secret strategy that others missed. But wealth is usually built in a far less dramatic way. It often begins quietly, through habits, systems, and decisions that look small in the moment but become powerful over time. Richness, in the financial sense, is less about sudden events and more about repeated behavior. The first shift is understanding the difference between income and wealth. Income is what you earn. Wealth is what you keep and grow. Someone can earn a high salary and still remain financially fragile if spending rises with every paycheck. Another person can earn less, save consistently, invest patiently, and slowly build real security. Many people chase income while ignoring the systems that turn income into assets. This leads to the second principle: create a gap between what comes in and what goes out. That gap is where wealth begins. If every dollar earned is immediately spent, nothing remains to compound. But when part of income is consistently directed toward savings, investments, or productive assets, money begins working beyond the hours you personally work. At first, the gap may feel small. 10% saved can seem insignificant, but wealth rarely starts large. It starts with consistency. Small monthly contributions, repeated for years, often outperform occasional bursts of motivation. Discipline usually matters more than intensity. The next principle is ownership. Rich people often own things that can grow in value or produce cash flow. This may include businesses, stocks, real estate, or intellectual property. The common theme is that assets can work even when the owner is not actively trading time for money. Wages depend on presence. Assets can continue producing in the background. This is why spending decisions matter so much. Every purchase is not only a cost today, but also the loss of what that money could have become if invested. $1,000 spent once is $1,000 gone. $1,000 invested may become much more over time through compounding. Wealthy thinking often compares present pleasure with future freedom. Another major factor is skill growth. Your ability to earn is one of your most important assets early in life. Learning valuable skills, improving communication, understanding technology, solving difficult problems, or becoming reliable in a scarce field can raise income far more effectively than trying to cut every small expense forever. The best wealth plan often combines higher earning power with disciplined investing. Behavior matters more than people expect. Many know what to do, but emotions interrupt execution. Fear causes people to avoid investing. Impatience causes them to chase trends. Ego causes lifestyle inflation. Comparison causes endless dissatisfaction. Wealth often grows when decisions become less emotional and more systematic. Time is the force most underestimated. People overvalue 1 year and undervalue 10. Compounding needs time to become visible. In the early years, progress can feel slow. Then growth begins accelerating because returns start generating their own returns. What once looked small can become meaningful. There is also a hidden principle: avoid large mistakes. Building wealth is not only about doing smart things but also avoiding destructive ones. High-interest debt, repeated impulse spending, speculative gambling, and constant restarting can erase years of progress. Protecting capital matters. Being rich also changes meaning over time. At first, wealth may mean paying bills without stress. Later, it may mean choices, flexibility, time control, and peace of mind. Many people imagine luxury as the goal, but freedom is often the deeper reward. So how do people become rich? Usually by earning more value, spending less than they earn, owning productive assets, staying consistent, avoiding major mistakes, and allowing time to compound the results. It is less glamorous than many advertisements suggest, but more reliable. In the end, wealth is rarely built in one dramatic move. It is built through hundreds of ordinary decisions repeated long enough to become extraordinary. The sooner those decisions begin, the more powerful they become.